Well, I've been keeping a close eye on our ag commodity trade today. I'm Marlon Bowling with you, and they're just not doing much when it comes to the grain trade. Let's take a look here at the corn market first. And we do have it trading about 2 1/4 higher right now in December. That would put us at 684.5, which is still relatively amazing considering that harvest is starting to ramp up in some areas. And we're still at these pretty lofty levels. I had a high today of 690 per bushel. And now we're at 684.5. On the soybean trade, November, well, it's been playing on both sides of unchanged today. We are now 3 cents higher, and we're at 14.58 per bushel. That's a dime off of our overnight high, 14 cents off of our earlier low from this morning. Now, looking at the wheat market in Chicago, we're 9.5 lower now on December at 862 3/4. That's been kind of a choppy market here. We're about on the low of the day now. And December in Kansas City is now 9 1/4 lower at 937 3/4. One tick from its low of the day, off of our overnight high here by about 22 cents now. So starting to get kind of weak all of a sudden in the wheat market. In Minneapolis, you have December 6.5 higher, though, at 944.5. Isn't that interesting? That's still 10 cents away from its low, and we're still within about 3 cents of our high from the overnight and early morning trade. What's going on in cotton today? The new crop December is currently trading 45 points higher. We're at 103.16 per pound. Well, the one and only Mr. Ted Seifried joins us now. He's with Zaner Ag Hedge, and he is going to help us make some sense out of what we're seeing in the markets here. Are we starting to see what I guess I would call the harvest doldrums right now, Ted, or not?
Maybe. I think, Marlon, we've just got so many other things going on that are inside of grain fundamentals, but also outside of grain fundamentals. You said earlier that it is a relatively quiet day in grains, and you're absolutely right about that. I think we should be somewhat thankful for that, maybe, because if you look at the carnage that's happening over in the crude oil market, down $3.50, the stock market really trying to recover or really just find some footing after the massive carnage that we saw on this last Black Tuesday. You've got a whole lot of recessionary fears. You have a lot of risk off happening. And yet the grains are kind of holding on to some ground here today, which is nice to see. We have some bullish things going on for the grains. You mentioned the big data drop that we had for export sales. It was a better than expected number for soybeans. Not much better than expected, but a better than expected number. The small caveat I would have to say there, though, is that we were selling a lot more 4 weeks ago, and that number has been kind of tailing off over the last 4 weeks. So while it was a good number, you have to take it with a little bit of grain of salt, and we are going to still need to see a lot more of those sales happen. With the Argentina deal selling 6.7 million metric tons since the beginning of the month, that's going to hurt our export sales for the next couple of weeks, I would think. So we'll have to see. But yeah, grain's kind of treading water in an otherwise major risk off sort of environment. I have to say it's a win. And then as we get into harvest, like you asked with your original question, we normally see cash pressure. We normally see markets come down. However, this was a late season surprise with a drought, with yields coming in lower than expected. So maybe you don't have quite as many cash sales that will be coming to market off the combines. And that could keep us from a profound amount of harvest pressure. But you still have to think that, seasonality, harvest lows, I don't feel like those are in yet.
I don't know if you had a chance to hear or see Tim Ross's forecast, but he was talking about temperatures in the hundreds again in the western Corn Belt. That would include parts of Iowa and maybe southeast Nebraska and Kansas. I mean, that's not really going to help finish those soybeans that haven't totally matured yet.
Yeah, but the problem is that a lot of the soybean fields that we were seeing out in Nebraska and southeast South Dakota, rain wasn't going to help them. Heat wasn't going to make a difference at this point. So yes, if that were happening over Illinois, in Indiana, where soybeans are still pushing towards the finish line, that would have been a much bigger concern for me. It's not good news, but I don't know if it's profoundly bullish. I don't know if it's going to shave another bushel off the yield, I guess is what I'm saying.
Okay, good point. Well, and you were on that Pro Farmer Crop Tour filing reports each and every day, and you had the boots on the ground to verify that. So again, thanks for your insight into that. We'll pause here, and Ted will talk a little cattle and hog market activity on the other side. Come on back. Well, let's go back to Ted Seifried of Zaner Ag Hedge, and we'll sort out what's going on in livestock today. And we'll start with the live cattle. As we go to the prices here, Ted, interesting to see how the cattle market is really strong on the nearby contracts today, with October up $1.15, and December live cattle are now trading $1.17 higher. Last trade now 151.20. That would put us about 45 cents from our high of the day, about $1 off of our earlier low. Now the deferreds are not that strong. Let's go to April. It's up just 50 cents right now, but they're already at a $13 premium out there. So one has to wonder if they're just maybe readjusting that spread a little bit today. Feeders, you have the October unchanged at 181.42. And now you have November just one tick higher at 183. So it's just kind of treading water in the feeder cattle market for the time being. On lean hogs, you have triple-digit gains all across the board, with October up $1.60. We're at 96.30, and December up $1.95. Last trade there, 87.30. Now it's $2 higher. 87.30 is within 30 cents of its high of the day. What do you see happening here in this livestock trade today here, Ted?
Fact that live cattle are higher, fairly interesting. For one, the feeders are not the leaders, like we like to say. And again, this was with the stock market earlier trying to balance, but now just even since we started talking in the last segment, going underwater and really kind of having a lot of pressure on it right now. So, you think live cattle had a technical reason for a bit of a bounce today. It's got strength. But I'm a little nervous that we're not going to hold on to that strength into the close. So we'll have to see where we close today. That chart looks like it's trying to break through to new highs, but it is having a hard time doing it. I have to say, if you're going to have issue with the stock market, even though we might not really have a big problem with domestic demand, the perception is that we will, right? And so it's going to be very difficult, I think, for live cattle to continue to extend gains up and over recent highs if you can't find the stock market holding ground and starting to bounce back. We'll have to see if that happens or not. The hogs, once again, I really like the idea of hogs as a value play going into a recessionary trade, the cheaper alternative for your proteins. I think a lot of the big money Wall Street investors and stuff like that, they're looking for that as well. So hogs have really found a lot of strength here this week with all the carnage that's been happening over in the stock market. And I think that'll continue if we continue to be under pressure in stocks.
Yeah, that'll be an ongoing theme as we get closer to winter here. Everybody looking for value these days, and who can blame them? Thank you, Ted, for analyzing the markets here on a Thursday morning. Appreciate the help. Ted Seifried of Zaner Ag Hedge. Janet, with that, I'll turn it back to you.